All right, guys, you're in for a big treat today. Actually, I've
Mhm.
got two great guests with me. Rachel and Mark are here, and we're going to be talking about oil and gas and all the good stuff, how you could really tax abatement. How can you save taxes almost 85% on your regular income, W 2 income, active income, we call it, and that oil and gas has that provision, and then 15% you get towards when we sell the investment and things like that, so almost 100% you get back. And if you're in 30-40% bracket, that's a lots of saving. So I'll be sharing the screen and we'll go right into the presentation, and I'll invite people in also. Let's see here. Where is the screen? There we go. Okay, not this one. It's this one right there. Slideshow. And okay, there we go. Right over here. Okay, and I'll let other people join also. Let's see here. Let's see. All right, Bucky. Bucky is in. Hi, Bucky. Nice to meet you. There we go. Hi, Bucky. Hi there. Oh, okay. She's got muted out. Oh, she tried to come in, but then she went out. But that's okay. No problem. We'll be able to again, do this right here and let other people join in. Hopefully, we'll have few people join. Let's see here. So then we'll start the show. Uh, I think it's about 4 o'clock, so sometimes people take a little bit longer. I could pause the recording, which will be a good idea. There we go. Oh, Nitin Juthani is just coming in. So we'll get Nitin come in. Oh, there are two, Angela Williams coming in. So we'll just start recording again. All right, Nitin, hi there. Nitin, nice to have you. Also, Angela, nice to have you. Please join us. Join us. We are right about starting the presentation. Thank you so much for joining, and other people will be coming in too. 71 investors actually registered, and life comes on the way, and it might be they are driving or getting to the office or home, because it's 4 o'clock here in California where I am, and it's 6 o'clock where our guests Rachel and Mark are. They're in the Dallas area. So we'll get started. I think that'll be great. We are recording it also. Glad that you are able to join us today. Hope you are excited, and we'll be talking about oil and gas. In big, deep terms, how you could save on taxes. That's the main. Yuval is coming in. Hi, Yuval. Yuval is coming in from my very good friend. Yuval is also here. So presented by Vinney Chopra, Rachel Griffith, and Mark Ayers. Just to give you an idea, again, it's a disclaimer by myself and team that this webinar is for entertainment purposes and educational purposes only. We are not selling any security. But if you like what you see in the webinar, please do reach out to me or to Rachel or Mark, and also Michael, who is also from the same company. And this webinar does not represent an offer. We'll be together for 1 hour, so if you can mute your cell phones and things like that. Some of you might know me. I'm a husband for 45 years. We moved to California. Our children went to Cal Berkeley, and also over there, down south. This one, Monica went to UCLA, and then I've written 3 books also. I do a lot of podcasts, a lot of teachings. I came from India with $7 in my pocket, and I've done 40 different funds and syndications, over 1.3 billion portfolio, and all the good stuff. Anyway, so some of you might know me, some of you may not, but you could follow me along on the websites and all. On the Amazon, there are books. I do live shows and podcast and all that. And please, for attending today, you will also get these 4 books, by the way. So if you will, just scan this, it's vinneychopra.com free benefits. You get all my three books. And also, there is a great book, The Upside of Oil and Gas Investing by Jay Young, the CEO of the company. So I'm going to just go right into take this out. And let's just come back here to back to where I'll be now, talking about my good friends right there. Rachel Griffith is a senior vice president of and partner relations. For King Operating Corporation, bringing over 15 years of experience in business development, fundraising, all the things at King. Rachel also serves as the engaging host and moderator for the firm's educational webinars and weekly oil and gas rundown live. You may like to look that up too, where she connects the audiences and the key market insights throughout the industry. So that's very exciting. And also with proven record of securing major investments, driving successful capital campaigns, she combines deep relationship building. So I'm very excited. Welcome, Rachel, joining
Thank
today.
you. Thank you so much, Vinney.
Yeah.
I'm very excited to be here this evening. I'm excited. Thank you, everybody, for joining. Thank you, those of you who taken the time to be with us tonight. So thank you so much, Vinney.
Thank you. And then Brother Mark Ayers is also brings 40 years of oil and gas experience across the United States and internationally with a career spanning exploration, development, acquisitions, investor relations. His expertise includes generating drillable prospects, and you're going to hear a lot more really good stuff today from Mark. So thank you, Mark, for really joining us today. I'll let the stage, if you would like to, Rachel, you could share your screen
Yeah.
and I'll give the baton to both of you. And we are recording it also. Oh, let me keep on bringing new investors in as they come in. But thank you so much. Rachel is there. Of course, Nitinji, Yuval, Cash. We got Angela, we got Alf, we got Mayors. Lots of people are there. So that's great.
Wonderful. That's wonderful. Well, thank you again, Vinny. Thank you so much for, inviting us here tonight at King Operating and for this opportunity to share a little bit about what we do at King Operating and how we really bring value and impact to investors through the oil and gas space. So I'm excited to just share with everybody, what is the opportunity, in
Mhm.
oil and gas and how it really can impact your portfolio, how you can turn your tax liability into
Yeah.
a wealth building asset. Most people look at their tax liability and they're just handing over money to the IRS and they don't realize that they can actually use that liability as a wealth building asset. So it's truly remarkable what oil and gas provides to investors. And of course, we have Mark Ayers with us tonight, my good friend and colleague. And why he's here is to also just give some hard proof and evidence in geology of what he has seen, what he believes. And of course, oil and gas has a lot of projections. We want to say that, but Mark definitely brings a wealth of experience and knowledge. So we're really excited to share with you guys tonight. And I'll go ahead and launch my screen, Vinny, and we'll get started
Yes,
with the
sure.
presentation.
Excellent, excellent. And then we'll have question answers also towards the end. Please do, put them in the chat and so forth, as I've opened the chat also right there. So look forward to it. Thank
Yes,
you. Thank you.
absolutely.
Yeah.
Okay, so introducing oil and gas is a very unique opportunity that we have here at King Operating. Of course, this is our disclosure information. We do work with plenty of attorneys. You can read through this with your CPA or your attorney as well. Let me get my clicker. There we go. So I want to just talk, Vinny, and I want to start by talking about why oil and gas. Why would anybody want to invest in oil and gas? Well, most people don't think about it going through their daily life and realizing that really the foundation that our societies rest on is oil and gas. It is energy. And when we saw oil and gas really become available to societies is when we saw, the boom of the revolution, industrial revolution. We saw developments within society that took us to another place, especially here in the United States and around the world. Energy is what propels growth. It has propelled, tech industries can't run without oil and gas. Medical industries cannot run without oil and gas. Everything in our society actually has to circle around energy. And the average person, Vinney, in the United States comes in contact with 6,000 petroleum items every single day. So that could be the chair that you're sitting in, the car you're driving, your cell phone, your cosmetics, your lotions, your plastics that you use in the kitchen. Everything it touches. Oil and gas touches almost everything in our daily life. And so it is a tremendous opportunity as an investor to say, I want to actually be a part of U.S. energy independence, right? And that fuels our economy. It creates jobs. It creates security for us in the United States. So it is a tremendous opportunity. And I would say right now we're seeing the boom of AI, right? We're seeing this incredible movement of, ChatGPT and all of the AI revolution. And we're also seeing, the cryptocurrency, Bitcoin. Well, all of that takes massive amounts of energy.
Yep.
Specifically, natural gas.
Yep.
So renewables are a wonderful accompaniment to energy. But the reality now in 2025 that everybody sees is that there's not going to be an energy transition. We're not going to see oil and gas be transitioned to renewables. That's impossible at this stage in our growth in, especially AI and crypto. It's going to take a lot of energy that can only be supplied through oil and gas. So it's a wonderful time to consider investing in this space as the world is dependent upon it. Dependent, very heavily dependent upon it. So let me keep going.
Yeah.
Vinney, anything you want to add there?
No, this is
You're
fabulous.
good?
You set
All
the
right.
stage. Yeah, you set the stage.
Wonderful.
Yes.
Okay, so just want to talk to you guys now. Why King Operating? That's who I'm with. I'm a senior vice president here. So I want to go over a couple things that really make King Operating different and unique in the oil and gas space. So we focus on what is more of a real estate model. And our CEO has been in the oil and gas industry for 30 years. It's going to be our 30-year anniversary coming up. Jay Young is a fourth generation oil and gas man. Now, in 2015, Vinney, he changed the model of our business because he wanted to put investors first. He saw where investors were actually being left out of one of the biggest parts of the oil and gas industry, and that is the divestiture. So what we do here is acquire, develop, and divest. Now, anybody in the real estate world knows, what do you do if you want to flip a house? You buy a house that has potential. You develop it, you prove it up, right? You got to put in the new kitchen, you got to put, to put in the new floors, and you do that. Well, what happens now? You actually sell it for a multiple. Exactly. So what we do is acquire high quality mineral leases. We develop them by putting targeted wells, and then we divest those wells for a multiple, and we allow the investor to take part in that divestiture, where traditional oil and gas models will only let you take part in the tax benefits and the cash flow, but not the big money where the divestiture is. So that's what we bring at King to the retail investor, is we allow them to take part in that.
Beautiful.
Yeah. So what we target here at King is a 2.8x multiple. This fund right now is a $125 million fund. It's going to be held for 3 to 5 years as we prove it up, and we look to sell it for that 2.8x. Now, here's what I want you guys to see. These are the 3 areas of focus for us at King Operating in the COP3 fund. Now, we have these 3 areas because what we do is diversify and de-risk your investment. Now,
Mm.
if you were just invested in one well or a single group of wells, it means that potentially if those wells don't do very well, you're going to lose money, right? So what we do is
Mm.
we diversify into three quality areas, which you see our non-op projects, our Bivens Ranch location, and our mid-continent. Okay, these are prime locations, and we're going to actually have Mark talk about what I would call, Vinney, is
Mm.
our crown jewel in
Mhm.
King operating. And it really is, Bivens Ranch is a very special location. Many of you, if you're investors or Vinney, you've been in real estate,
Yeah.
you know when you find a special project, don't you? You know
Totally.
it. You find it
Totally.
and you think, how did I get this? Wow, and you just know that it's something special. So I've invited, Sir Mike Circle and I invited Mark Ayers to come on as a geologist, of course, with that amazing wealth of experience and just give you guys some information about this Bivens Ranch location. He's gonna try and keep it easy to understand. Of course, he's super smart and he's gonna show you some slides and break them down for you to understand. So, Mark, welcome. I'm gonna go first to the beautiful map of our Canyon Line Formation.
Oh, thank you, Rachel. I appreciate it. Oh, all right. Well, like Rachel said, I've been doing this for many years. Started with Conoco, and then had been through several other companies. Ultimately, spent 25 years with Hunt Oil Company, and one of my jobs through all this was to be an exploration manager. So not only did I have to look at a lot of prospects people brought to me to evaluate, but I also had to find areas where the company could grow. And so I was really excited when we found this opportunity. Some people brought this opportunity to us. It's an existing oil and gas field. So you don't have you have the upside without having the risk of drilling a rank wildcat. This actually is a named oil and gas field by the state of Texas. It's called the Bivens LIT Canyon Lime Field. It covers over 60,000 acres. And to date, before we just drilled, there's been 20 horizontal wells drilled in this feature. The thickest part of this field, the richest part, is the orange color that you see here, and then the yellow outside of that. That actually shows the thickness of the oil in place. And I don't want to get into a lot of details right now, but you can see all the little turquoise areas. Those are places where wells have been drilled in the past defining the field. There's two wells that have been drilled recently by King, and we're very excited about them having great initial flow back. We've only been flowing them back about 30 days so far, but already made 10,000 barrels of oil out of it in those 30 days. And so we're doing quite nicely. Those two wells are the red sticks you see there. There's a green dot and two red sticks. Those are two horizontals that were drilled about a mile and a quarter each. And we landed them in a very narrow interval that we chose specifically to enhance production. And what we're bringing to this that we think will help us be more effective than the other wells that have been drilled to date is an understanding of where the best part of the formation is to land the well. So how did we know that? Well, we knew that because several of us here worked at Hunt Oil when we were engaged with the Bakken Formation in North Dakota. We were early in that play, and I remember in 2007 when we drilled our first well, the Bowman well in Mountrail County, North Dakota, in a field called the Partial Field, which turned out to be one of the best fields in the play. And we IP'd it at 2,800 barrels a day. And we did it by staying in a very narrow window of over a mile, about a 30-foot window, which was a carbonate rock. It sort of looks like an Oreo cookie, if you can imagine it. We had the source rocks on the top, which was the top of the Oreo cookie. We drilled the well in a 30-foot window, and then we had another source rock below it. And those source rocks were really overpressured. They had created a lot of oil that could not escape, and it gotten into the formation that we drilled into. We created fractures, and we created a lot of value. Well, those are called resource plays. You may have heard the comment shale plays. That's really the thing that's driving the great production growth in the United States right now, in the continental United States. are these resource plays. Well, this is one of those. And we'll show you at the end of this, but you can see right now, if you wanted to look at it, all the little white sticks we have on here, we're estimating that we can drill up to 167 horizontal wells in addition to the ones that have already been drilled. And if we're correct in predicting where we think the best reserves will be found, just like we did in the Bakken, we think we'll have the best reserves in the interval that we landed these 2 horizontal wells in. And I'll try to explain that in a little more detail in a minute. Let's go to the next slide, Rachel. And Vinney, if I need to get in more detail, you can tell me, okay?
No problem. That was really great. I mean, I learned a lot. I'm sure our, investors who are also joined, they really found it very, very helpful to see, and this is, please go ahead.
Okay, well, so what I showed you a minute ago, let's go to a simple analogy. That was like looking at the top of a birthday cake. What I'm going to show you right here is if we took the birthday cake and we sliced it down the middle and we put it on its end and we looked at the different layers in the cake. That's what we would call a cross section. And that's what you have here. You have a seismic line, and we have on this, not only do we have a field that we're developing, but we have 348 square miles of high quality 3D seismic, which helps us decide where to drill the wells and how to avoid potential problems while drilling those wells. And that's an example of this is a line right where we drilled the first 2 wells. And you can see it's very flat, no faulting where we drilled the wells, and we could predict where we needed to be, and we were successful at that. The picture down below is just an illustration of where the production is coming from. And here you see this green interval. That is where the canyon lime exists. What is the canyon lime? Well, it's not just a limestone. It's actually a formation that has lots of different layers of rock comprising what we call the canyon limestone. And a lot of those layers, as a matter of fact, 3 of them are highly rich organic beds we call source beds. And so what we did on the first 2 horizontals is we landed between the lower source bed and a middle source bed in a rock that we thought could be fractured. And that was our key to, we think, improving the results over what other people had out here. And so far, like I say, it's early time. We've only been flowing back for about 28 days on one and 24 days on the other. But the results are very encouraging. As a matter of fact, one of our partners who has participated in all the 20 wells drilled out here says these are the best early time flowback results he's seen. So we're very encouraged by that. One of the things I might add here, when you're flowing these wells back, what makes them hard to gauge? This isn't like if you see a show on TV where somebody goes and drills a well and oil flows to the surface, and he says, we're going to make 500 barrels a day. I watched a show called The Landman last night. I have to watch it to tell my family what is real and what's not. And they predicted they were going to make 500 barrels a day for 2 years based on just drilling through the zone. It doesn't work. It's not that easy. What we had to do when we drilled these wells, because they're relatively impermeable wells, is we had to do what we call a slick water frac. And we put 10 million barrels, actually 11 million barrels of fresh water in each of these horizontal wells, because that fresh water is what we use to frack the rock, create a nice fracture network to hook up all the poor permeable zones and make a good quality well. And then we pump sand in so that we can keep those fractures open. And that's really a pretty simple process, but that's what we do. It's fresh water, has very few chemicals in it. We pump it down the hole, and now we have to flow it back to get the water out so that we can take that nice network of fractures that we created and let oil and gas flow in. So we're very happy that already we're creating about 500 barrels a day. And so it's early time. We've only got about 13% of the total load back. We hope by the time we've got another 20% that the oil will be up to 1,000 barrels a day. But that's a prediction. I can't guarantee that. But that's the kind of thing that we're hoping for. So let's go to the next slide. This is again another example of a cross section, and this is maybe a little confusing, but each one of these is a vertical well drilled through these rock packages that we're exploring, called the Canyon Lime. And if you would envision these as drinking straws that are punched through the cake, and so what we now see is through that little straw, we see different layers in there, and we run a tool down the hole called an open hole log, an electric log. And these tools, using different techniques, actually analyze the rocks that the well has encountered as we drill through it. And then we can use that information to decide where the best place is to drill and complete the well. And like I said, in the Bakken, we had the Oreo effect. We had these reddish brown zones. Those are the black Oreo parts. Those are where the organic material resides that creates the oil. The white is the other stuff out here, and that's where we drill the well and get the most frackable rock we can to create a fracture network that connects the Oreos, or the source rocks, above and below. So the first two wells we've drilled were in what we call this middle canyon target. And I hopefully you can visualize what I'm talking about. So we've got a set of the brown, reddish brown above and below, and an interval in between that was very frackable rock. And that's where we landed the wells. And so we had to stay in a 60-foot interval, and we did it pretty good. Even though we drilled over a mile, we were able to stay in a pretty narrow window most of the way through it. One of the upsides that we have, and we're going to in the next two wells, I'll show you what we're getting ready to drill our next two wells. We are going to land in what's called the upper canyon target, because we think that this is actually an advantage over the Bakken, and that we have more source rocks here. So we're going to not only develop it in the middle canyon target, but we're going to go and try to land it in the upper canyon target. And we're going to do what we call wine racking. If you guys have done any reading about what's going on in the Permian Basin, that's really been so successful, that's where I think they have at least 3 targets, and maybe 4 in some places, but they're doing the same sort of thing so that we can drill at least twice as many wells in the same area to get twice as many reserves. So does that make sense to you, Vinney, what I'm saying?
Yeah, very good.
Yeah, Myers,
Totally.
this is VJ. This is the first time I'm attending the Vinney's show.
Hi.
Actually,
Hi.
I work with some big guys in Permian Basin, and one of the
Oh,
techniques they were using was ice fracking.
oh,
Yeah, I couldn't hear the comments, but
oh, the ice fracking, he was saying. Yeah.
yeah, I don't know what that is. I haven't done that, but slick
Oh, okay.
water, I definitely know we're doing that, and it works really good. Actually, when we started in the Bakken, we did a gel frac. That was what was the standard frac procedure then, because the challenge with using just water to fracture is it's hard to carry all the sand that you want to put in these fractures, because the sand will drop out if the flow rate of the water drops down. And
Myers, what they were doing, Myers, was like they will inject the water in the rays, the cracks, and then they will inject the nitrogen, like a nitrogen gas, and it will become ice instantly.
Ice in there.
nitrogen, yeah, nitrogen gas.
Yeah,
I've
yeah.
never seen that tried. We may need to explore in that. I hadn't really seen that kind
Sure.
of thing done.
Yes.
But anyway, so we're doing right now is what you would consider, at least by our engineers, the state-of-the-art fracs in the Permian Basin. But like you said, we need to learn more about it. I'd never heard of that
Yes.
ice frac. So
Sure.
anyway, let's go to the next slide. And so what I wanted to show you, okay, the first 2 wells we drilled, or I can't really point to them, but if you see, it says producing laterals 3501 north and south. Those are the 2 wells that are making over 500 barrels and 1.6 million cubic feet of gas right now.
No.
Unfortunately, we're still recovering a lot of water, and hopefully we're going to end up having 700 barrels a day out of each of those wells. And And so now the next 2 wells we're already building the pad for is the 104 north and south. And you can see we could have a very long lateral on one of those because we have a much bigger runway of where our land allows us to drill. And then we're going to stake 2 additional wells because in the next year, 2026, we intend to have another 6 wells down. So we'll have a total of 8 wells producing using the landing that we think is optimal and testing our example. And if we're successful, like it looks like we are right now, we'll be able to use that same model over the full 60,000 acres. Now, what are we improving on? Well, if I took the average well over 6,500 feet that are drilled in the existing horizontals in the existing field, you would get 247,000 barrels and 2.5 BCF of gas. And this is very rich gas. So this gas gets about a 40% uplift over what dry gas would get because it's got a very high BTU content. The point there is that these things, even as they're drilled today, would be commercial in the right circumstances. But what we want to do is enhance that kind of performance. So we've got this great field that's well-defined. We have a great strategy. And if I had time to explain it to you, how we came up with a strategy for where to land it. But the biggest factor in it was our experience in the Bakken. In other words, we didn't want to land it in the source rock. We didn't want to land it below the source rock. We wanted to land it between the 2 source rocks. And that's what we did in our first 2 wells. And we're going to continue doing it.
Excellent.
Let's go to the last slide. Just one comment, Vinney, and that is going back to this. Sure. If we're successful in landing these on 2 horizons in the upper and the lower canyon, that's where we really can get some added value out here, because we would be able then to do the wine racking where we could drill up to 4 wells.
I see.
Off each pad. So that's what's making the Permian Basin such an outstanding project. And that's what we expect to have happen here. And like I say, it's early days, but right now, everything we're seeing is very positive.
Excellent. Excellent, Mark. Thank you so much. Oh my gosh, I learned a lot. I invested, by the way. I want to, be open. My next door neighbor shared the success because he put hundreds of thousands with this company 3 years back. Then last year he put more. I put also. I'm very, very excited because the fund drilled several wells, not just one. Something which I never really got into oil and gas was because I didn't want to lose my money, like all of us. So the big thing is that the fund drills at 8 locations, different places, so that there is much better chance of getting the cash flow, monthly cash flow, as well as the divestiture, which when they sell it, we, our double, triple our money. Next one. Yeah, sure. Please go for it.
That's exactly right, Vinney. So that's just, the Bivens is just, one of our locations. We also have the mid-continent, which we talked about earlier, those 3 locations. But why I wanted to really focus in on Bivens is it is such a tremendous project to scale. And I like to have Mark on because it's really about, in oil and gas or in any industry, it's about your team and the experience that your team has. And, you can think of it as if you had bought a piece of property and you needed to renovate it. Well, you better find a contractor that has good.
In half a mile, use the left 3 lanes to take the I-275 south exit towards St. Petersburg.
Please mute yourself.
Three directions.
Please mute yourself.
I don't know why I'm flying. Slow down.
But he must be in there.
Okay, I'll just let Rachel, I'll just unmute you. There we go. Right there. Please go ahead and unmute yourself.
Vinney, I have a question.
Okay, please go ahead.
Yes. Sorry, I just joined 5 minutes ago. I just got the link. Did I miss a lot?
Yeah, quite a bit. We are recording it, by the way, and we'll be sending it to 61 or 60, investors wanted to join. So we have recording it. We'll send it, the whole presentation, back to everybody. Sure.
And question for Mr. Mayers.
Yes.
I came at the previous slide, the half So what formation are we talking about? What areas are we talking about here?
This is actually in Texas and
Okay.
also in New Mexico. And I
Okay.
saw on the north side, so there's a map there in the early part of the presentation. You will find it all very, very nicely. This Permian Basin is actually near to Odessa and Midland, Texas, where I got my start in multifamily there. I bought a lot of
I'm in
apartment buildings there. Yeah, yeah.
I'm in oil and gas. I'm very familiar with
Okay,
the
beautiful,
area. So
beautiful,
yeah.
excellent.
So,
Yeah, excellent. I'm so glad we are very interactive in the presentation. That's what
Absolutely.
makes it exciting. Yes,
So,
yes.
so yes, so to answer your question, yes, we have projects in the Permian Basin. The project
okay.
here is the Canyon Line Formation.
Mhm.
And then we also have a location in Anadarko Basin, which is called the Mid-Continent.
Okay. Okay.
Yeah. But this is all recorded, so you can definitely go back
Yeah.
and listen
Hmm.
to Mark go through the whole thing again, and it's very informational. So yeah, but this formation is the Canyon Line.
Rachel, I wanted
Correct.
to add one thing, Vinny. You know,
Uh-huh.
we talked about the positive power of being able to divest things after you
Yes.
develop them. This project lends itself perfectly to that because it's
Hmm.
such a big footprint that you could attract a very large company to come in here and develop it and sell it once you've proven the value of it, just like your development in a real estate model. And so
Totally.
this is really a great opportunity for that.
Excellent, excellent. Thank you.
Yeah, exactly. And I'm going to just flip to this slide here for a minute and talk about in the energy sector, you
Mhm.
know, the ability to scale deals and to sell them. That's really what we're talking about here at King. Now, this has been done in private equity for a long time, right? So some of the great energy plays have been Trevor Reese Jones and things that happened in the Double Eagle. So the reality is though, Vinney, unless you've got 25 million, $50 million to invest, nobody's come to ask you to be a part of these deals.
Yeah.
Right?
Yeah.
Nobody said, hey, come be a part of these deals. It's because they're only for, you know, I'm going to just say the uber wealthy people who put in 50 million, 100 million, $500 million to see these divestitures. But this is actually what we are building here. We are building and scaling these deals. And the locations like the Canyon Line, the Bivens Ranch is what gives us the opportunity to continue to scale and
Mhm.
sell. And that's how you build a deal, is you continue to develop assets, right? So you develop assets and you build them along the way, which make them very attractive to larger companies. As you do
Mhm.
that over 3 to 5 years, you're looking at having the ability to sell your assets for $1 billion. And that's where the investors then are seeing that 3x, 4x opportunity.
Wow.
Yeah.
Amazing. Amazing.
Yeah. Lots of deals happen every day in oil and gas. And oftentimes people don't hear about them, but they happen a lot. I mean, $500 million deals, $300 million deals, $1 billion deals. So that is our goal here. That's our CEO, Jay Young. That's his vision. That's his passion, is to be building $1 billion opportunity.
So are there any wells producing right now, Rachel?
Yes, absolutely. So we actually have 7 wells that are online right now, then 5 that are producing in the Permian Basin, and 2 of them, which are the wells that Mark is talking about. Those are the wells that have just come online. And Mark, they went online late October. Is that correct?
That's right. One's been online for 28 days. I just counted it, and the other's been on flowing back for 24.
24.
So,
Wow.
so you have
Yep.
any data from Texas? What is that like commission which manage the upstream upload of the gas? So you have a data on that, on those production of the wells?
We do, but one of the things that we were talking about is this is early time. Right
Mhm.
now, we're flowing back a lot of the material we use to create the fracs. When we do these fracs, we use about 11 million gallons of water in each well. And
Mhm.
in order for those fractures to really be effective, we have to remove that water. So we won't know what these wells are going to ultimately do until we reduce the water out of those fracture systems. And so far, we've recovered 12 or 13% in one, 12% in the other. So it'll be a while before we see the peak production out of these wells. And then hopefully they will continue to produce once we get the water out. We have the fracture network that we created with the frac, and all the production will flow into those fractures. And we use, like I said, sand to keep the fractures open. They flow into the wellbore, and then they flow to the surface. We may end up ultimately on some of these. Eventually, they're going to have to go to pump because they won't flow to the surface by themselves. But we have a well out here that was drilled by Apache that we think is going to make 600,000 barrels of oil. That's the one that we use as a template for why we think we're landing them in the right place. And that particular well, they only landed about 30 or 40% of that lateral in the zone that we landed our wells in. And we think that that's why our wells will be even better than theirs. But like I say, it's early time. And but right now, I mean, 10,000 barrels ain't bad when you're just getting started.
Yes, yes.
So, and the other thing, we're working to hook up the gas because obviously we don't like flaring gas. Not only do people cringe about it as far as environmentally, but let's face it, that's revenue. We want to capture that revenue. And so we actually are already negotiating with a company and there's a pipeline within about, I think it's about 2,000 feet from where we are to hook up in their gathering system. And so when we get that deal done, which, like I say, we're in the process of finishing that right now, then we'll be selling not only the oil, but also the gas.
Excellent, excellent, excellent. I do want to say this slide is the most important slide. Got me excited because this oil and gas has provision where we could take the deductions, the negative K1, as active income against W2 income, against all kind of active income, not passive, which is in real estate. In hospitality, I can give active losses, but in my apartments and senior livings and other things that I buy, I only give limited partners, passive losses. So please go ahead. Yeah.
Absolutely. And yeah, Vinney, that's what attracts so many people to the opportunity.
Yeah.
So Vinney, sorry. So you said this one can be taken as an active income
totally,
versus the passive real estate. Okay, that's interesting.
Oh, yeah, against your regular income, W2 income. Yes, sir. Yeah.
And I'm going to break it down. Sorry, Vinney. I have another slide in a minute that will show you a really great illustration of the tax opportunity. Go ahead, Vinney. Sorry.
No, please go ahead. Totally.
Okay. Well, yeah. So when we look at this slide actually gives us what I call the three pillars of value for partners and investors with King Operating. Number one, that your investment is 100% tax deductible. Okay. Yeah. Now, like I said, I'm going to pause there on the taxes because I want to move to the illustration slide in a minute and break it down for you. So our middle slide right now is the monthly distributions, the cash flow to you. Sorry. Oh, that's my other slide. Wait.
Yeah.
So the monthly distributions. Now, a lot of oil and gas companies don't send out monthly, but we do send out monthly. We want people to get money every month, revenue checks every month. So our targeted annualized projections for this fund are 9 to 14% annualized projections. Now, what's wonderful about the current fund is that it is already cash flowing, and we've been sending out revenue checks since May, and currently with the 5 wells that we have online, the 2 that are just coming online, our distributions are at a 5.7%. So we're very happy with that. And we're really excited about what it looks like when these Bivens wells, start to really kick in and the production goes up. We're definitely going to see those revenue checks increase. And once Bivens goes on, that's 7 wells we've got going, and we'll plan to have 7 more wells drilled in this fund. So we're definitely excited about the distributions. And of course, the third pillar, like we've been talking about, is the opportunity to see a 2.8x on your capital. Now, this is just an overview of if you invested $200,000, Our minimum investment, I will say, is 50,000. Our minimum investment is 50,000, but one unit is 200,000. So over that 3 to 5 year period, it can give you an estimation of about 560,000 if we hit that 2.8x multiple.
Yeah.
So now for the slide that really breaks it down for investors and for partners. So yes, the special thing about what is called IDCs in oil and gas, that's an intangible drilling cost. That's where you get this opportunity to take part in the tax deduction. And this really has been around in the tax code for a very long time, but I would say 1984, Ronald Reagan really solidified the opportunity for accredited investors. You do need to be an accredited investor to take part in oil and gas. And that means, real quick before I break this down, that an accredited investor is if you are single, you're filing singly, you make $200,000 a year. If you're filing joint, you make $300,000 a year, or you have $1 million in net worth, not including your primary residence. Okay. So that's an important part. But if you're an accredited investor, the US government said, hey, we want to incentivize you to participate in US energy, US oil and gas production. And so they offer you this incredible tax benefit when you participate in US oil and gas independence, right? We want to be independent. We don't want to be at this time having to get oil from other countries. So this is really the opportunity that they offer. Now, what we do is we take the example of a $200,000 investment. Okay, we use a deduction factor, and this is actually a modest deduction factor for us, of 75%. So that means your year one deduction, what you're going to see on your K1 is a $150,000 loss. That can go against your W-2 income, active income, cap gains, all of that. It can go against. So now they used to call it your adjusted gross income. Now they actually call it your total income. Same thing. So it applies directly to your total income. Now, a lot of you are if you're in California, you're roughly in a 40% tax bracket, could be a little higher. Sorry for that, but we're here to help you with that. Which means that if you're in that tax bracket, you're going to see a savings of $60,000. That's cash on cash. That's an immediate return to you that you're not paying the IRS. Okay. So that kind of breaks it down in a really easy structure for you to see. Now, again, King Operating, we don't just want you to make a tax play with your money. We want you to have a quality investment. So it's tax play, it's quality investment for cash flow, and it's a return on that capital, right? That's what we want to see for you. So when we look at the track record here at King Operating, we are very proud of that track record on our tax benefit on what we offer, that we've seen averaged annualized 82% on those K1s. We will expect to see higher. I don't like to overpromise, but I would think this year we might see 85% with the big beautiful bill. It could be a little bit higher. So our average is 82%, and our monthly distributions average annualized from 2021 to 2024 has been a 7%, and we're very happy with that. If you factor in all of the interesting things politically that happened over those years, we're very happy with that track record.
Totally. And that is the monthly distribution while the asset is being worked on.
Yes,
and then when it's sold, that's when you are able to get the cash flow, the equity gain, your original money back, plus the upside, we call it in real estate. Same thing. Yes.
Absolutely, Vinney. So I just want to put in some projections here of what we are seeing currently in distributions. So what you're looking at is where the funds started, and those were our partnership wells, right? Those were just 5 wells that we have a partnership with in the Permian Basin. And now you see when the Bivens wells come on and the wells continue to be drilled in this fund, because it's still early on. Only 30% of this fund is subscribed, which is actually fantastic. If you think that it's already, it's at 5.7 for distributions, that means that there is a lot of growth left to happen for investors in this fund. And we're excited about that. So definitely a lot to look forward to here. Now let's kind of break down an overview quickly of what makes King different versus some of your typical oil and gas companies out there. So you'll notice that there are tax benefits for both. There's passive income, but quality leverage to develop additional wells. Now, this leverage is based on the fact that we have multiple opportunities within this fund. We are not just looking at running the well until it's dry. We are looking at divesting, which makes it the ability to use leverage possible. Now, our real exit strategy. So lots of companies, and I'll just be honest, I won't name the name of this company, but I talk to people who've been in some oil projects, and then they get news that the wells are dry. Sorry, that's it after 10 years, and they don't see anything else. But here at King, we have an exit strategy, and that's really what makes us different. And that 3 to 5 year target hold. So we say, look, in 3 to 5 years, we want to be divesting assets and seeing that capital returned to our partners with a multiple. So I'm going to wait on this for a minute, Vinney. I want to, let me go through this, and then I have a couple slides I want to bring up from another presentation because I see they want. But just a really quick overview. So what we have it right here. If you were interested in partnering with King, what would that look like? You would reach out to Vinney and let him know. He would contact us, and then the process is actually pretty simple. So you would talk to us. We would take you through any more questions. Then we would send you DocuSigns. You would do the wire transfer with us, and you would get a very wonderful portal here. We keep our partners incredibly updated. We share lots of information inside that portal. Once you're a partner, you have access to all of the financials and information on the wells and production. So we're very transparent when it comes to sharing information. We send out updates weekly, and that's really the process. It's pretty seamless. You would need a letter of accreditation from either your attorney or CPA that you work with. Now, let me, Vinney, actually grab one more slide here.
Totally. And please do get ready for some questions. We would love to answer the questions also, question and answer session. And it's been a very nice 33% show up is pretty unheard of in a webinar. I'm really, really tickled pink, that we are able to have so many great investors join us today. Yeah,
it's been wonderful.
Yeah.
So I just wanted to show, again, our company leadership, because I noticed this slide wasn't in here, and you talked about the book, The Upside of Oil and Gas Investing, and Jay Young, our CEO. So here is the book, and it's published by Forbes, and you can get this book off Amazon, off our website at kingoperating.com. This is a tremendous read because it really breaks down our business model and the journey that Jay Young went through to say, I want to offer investors a different opportunity that actually puts them first. And it's fun because it has some family stories in there, and it's just a really great read. So that's Jay Young's book, again, published by Forbes Books. And I definitely recommend you guys, getting that book.
And I had the pleasure to meet Jay Young and the whole team in April when I went there to Dallas. It was fantastic, almost an hour and a half. They were so hospitable, and everybody, and I had another partner with me. So it's very exciting to see how genuine they are with all the investors, so they are in the Dallas, Frisco area there. Really enjoyed meeting the whole team and Jay. Yeah.
Well, I'm glad, Vinney. I'm glad you've been able to be here and to meet him in person. What I love is that he is a very active CEO. He's very involved, very active, very passionate about this business. And so it's always good to work for somebody who has passion, right?
Totally.
If you work for someone who doesn't have passion, that's very concerning.
And like I was saying, I'm buying the Marriott courtyard right in the backyard. I'll be coming in and out there now. We close on that hotel in 2 weeks, I think, and that's going to be exciting.
Yes, we're going to be hanging out with Vinney at the Marriott. It's going to be amazing. Maybe if you partner with us, we're going to have a partner party at the Marriott.
Yes. Totally. We have meeting rooms, everything. And we are putting a top golf simulation suites also. Wow. Fun. And it's occupied 100%. I could not get a room when I came there. That was so interesting. I had to go to another hotel to stay the night because my hotel was fully booked, 100%.
Well, you know what? That's a great problem to have. When your hotel is fully booked, I mean, really no complaints about that, right?
No.
Yeah, so just the last one I'll end on again, as I mentioned, that is our team. And we're very, very proud of our team here. We have gentlemen with incredible experience. We've got our landmen, our land and business development guys. We've got geologists. We've got chief operating officer, production. We have an incredible team here. They're all here, and it's an honor to work with them and to learn from them. Combined, they have 200 years of experience. They have drilled all over. Mark, I say all over the world, in so many different basins and projects. And it's just incredible to have these gentlemen on our team. And I would say if anybody's looking at oil and gas, number one thing, look at the team. Look at the team. Make sure it's a good one, because you want people who know what they are doing.
So true. So very true. No, what a great presentation. I'm so tickled, Rachel and Mark, you could join. And again, if there are some questions, we would love to answer. The specialists are right here with me today. And please raise your hand, or, I can unmute you, or put them in the text, chat also. I'm looking at it. If we have some questions, really enjoyed having such a great seminar together with all of you here. Thank you for sharing the time with me and everything, and with our guests. So the biggest thing I could say is that I'm so tickled pink because I'm starting to get monthly checks, and I love them, dividend checks. And it's just like, real estate, like what I've been in. We buy it, we improve it, like Rachel was saying, and then we sell it, divest it. And that's what we didn't show some of the slides where we do the PUDs and the adjoining PUDs. Yeah, that one.
We should have done some PUD slides, Mark.
What's that?
We should have done some PUD slides.
Yeah, the PUD slides. I know Michael had shown some, which is fantastic, that we are drilling the main wall, but then there are two simultaneously next to each other, which we could sell them for other explorations and bigger companies and all that. So the whole model really is exciting model. That's what I like. I don't want to invest into oil and gas and, give me 4 years of dividends or whatever, and then say it's dry, it's gone. But I like it because in the King operating, it's the dividends and the whole 100%, write-off, which is fabulous, on active income, W2 income, and active, gains and everything. The third thing is the divestiture, where we get our money back with the upside, which is what we do. Yeah, with the upside. So that's the fantastic thing. If there is any question, I would love to.
I see a few, Vinney. I'm just going to answer a couple of them, and I'm going to let everybody know that this was kind of a condensed, high-level view of this presentation. And I see even we went a little long, so I'm going to try and go through these questions the best I can. But the best thing to do if you're interested in this opportunity is to reach out to Vinney immediately after this and say, connect me to King, and we will one-on-one get with you and go through the opportunity in much greater detail and answer all those questions for you. Okay, so
beautiful.
yeah, so just real quick, let me start going through them. So payouts are based on production. Yes, they are based on production. And that's why in that last slide, you see as production increases, your distribution checks increase as well. So track record, yeah, I talked a little bit about our track record. And of course, if we jump on a Zoom, we'll go into all that in more detail. But past investments, we said our annualized average distributions were 7%. So we're happy about that. And the total raise for this opportunity is $125 million raise. So that is it for a collection of wells. So the collection of wells, yes. So it's about targeting around 14 wells to be drilled in this fund. As I said, we have 7 that are drilled right now. So we will be targeting to drill 14 wells in this fund. So, and you said an example of 1 to 2 wells, 1 to 2 wells aren't greatly accessible. Yeah, exactly. You're saying exactly the thing that we focus on is not putting you and your investment in 1 to 2 wells where if they don't go good, you've lost your money. You're actually diversified into over about 14 wells, currently 7 wells, and not just in one location either, in 3 locations. So that's really how we de-risk and diversify your investment. So, I mean, that's fun.
Any other question? Yeah. Okay.
So this one just asking, go ahead, Vinney.
No, go ahead, please.
Yeah. So one of the things that someone's asking about is our last fund. We're actually really happy that Fund 2 is going and still getting distributions. And oil and gas is definitely there's a little bit of risk to it. Now we believe with our model, and we've seen with our model that it has been de-risked for a lot of people. And it's not. Oil and gas is not what it used to be, Vinney, in the 80s and the 90s, where there was dry holes and there was a lot of miscalculations and people were burned very badly in oil and gas. With technology and all of the seismic that Mark uses, and even through geopolitical, even through, I'll say it, certain administrations that really did not want oil and gas to succeed. I'll say that. We are very happy that things are progressing the way that they're progressing here at King Operating. So do you have to be located in the US to invest in this? Patricia, that's a great question. So actually, you don't have to be located, but you would need to be able to transfer the funds to the US. And you would need to also be able to provide an accreditation letter. But we do have investors from outside the US.
Excellent. And again, as I mentioned it in the start of the presentation, for coming through the end, a whole webinar, thank you for spending great time with us. And you made it. Here are your free benefits. You could go to vinnychopra.com/free benefits. My 3 books are there for you, digital copies of them and audible copies also, of my apartment syndication, Senior Living Investing Made Easy, Positivity Brings Profitability. My 4th book on hospitality is going to be uploaded also. It's going to be featured and we'll make it #1 seller again on Amazon coming up. And also Jay Young's book, also you could get it on Amazon, The Upside of Oil and Gas. But my cell number is right there. If you'd like to write it down, 925-766-3518. That's the easy way to reach me right away, after the webinar and all that. Thank you so much for joining. Thank you, Rachel. Thank you, Mark. It's such a pleasure.
Thank you so much, Vinney. Thank you so much. It was an honor to be on with you and an honor to be on with your audience. Thank you so much.
Thank you. It was such a pleasure. Good night, everybody. And we'll be sending you the whole recording back to you, everybody, so that you could watch it again and then write down your questions. And then you could meet with, the King Operating team. I think you'll be very pleased. They are very professional. I love them. Thank you again.
Thank you, Vinney.
Good night.
You, everyone. Have a good night.
Good night.